Persistent Systems is the counter that is in focus today on the back of its earnings. Let's try to pull up the counter. It's down almost 8.4%. Overall, the earnings were in line. The outlook was also positive, but the stock is tanking in trade today and at its day's low point. My colleague spoke to Sandeep Kalra, CEO of Persistent Systems. Listen to that conversation.
Straight quarters, so congrats on that. Can we first just summarize what went behind this 3.3? Even though it is maybe 10 basis points lower than what was consensus estimated, it's a good quarter.
So good morning, Neeraj. Happy to be here. So for Q1 FY26, we delivered a revenue of about $389.7 million. This translates into a sequential 3.9% quarter-on-quarter, 18.8% year-on-year. In constant currency terms, this translates into 3.3% quarter-on-quarter. Now, as you rightly said, this is the 21st sequential quarter of growth. So it's been built up over several quarters. Now, coming to the margin part of it, EBIT came in at 15.5%. This is 150 basis points improvement year on year. And as compared to the last quarter, it is 10 basis points down. Please keep in mind the currency fluctuations that happened over the last quarter. Now, let me give you a little bit more about the order book. The total contract value for the quarter came in at $520 million. The TCV of the new bookings was $337 million. The annual contract value was about $385 million. Happy to answer questions on this.
Okay, let me try and peel this off one by one. So BFSI was very, very strong. Is this Europe geography contributing? Would you focus a bit on Europe right now? Is that coming up? Because, and that's the obvious question in everybody's mind about what the trade wars are doing to different geographies.
Right. So if we were to look at the geographical split, the North American geography for us grew by 17.4%. Europe grew by 37.5%, but please keep in mind Europe is only about 8.5% to 9% of our revenues. So on a smaller base, it grew much faster. India grew by 18.3% and the rest of the world is very small for us. Now, if you look at banking financial services comment that you had earlier, the banking financial services growth that we saw was predominantly North America. And if you look at the overall, geographical thing that is happening in terms of the macroeconomic, the President Trump tariff discussion and so on and so forth, our feeling is that this will continue for another maybe 1 quarter, 2 quarters. It'll settle down and the North American geography should also, once this is settled down, start growing very, very well for everyone. It is the biggest market any which ways for everyone in the world. Europe, obviously, because of these tariff discussions, etc., obviously they have their own takes from this and they will also start investing. So in the next 2 to 3 quarters, we believe that the macro should settle down. Also, given the fact that next year, late next year, there are US elections, all this has to settle down well for the incumbent government to do the right things. So all of this should bode well for the demand environment. In the meantime, while the macroeconomic environment is soft a bit, people are not stopping. There are enough and more deal discussions. The decision making is taking longer, which obviously should get adjusted. So overall, I do believe, even though the macroeconomic environment right now is soft, from a decision making perspective, it should open up and it should bode well for everyone.
So, well, there was solid TCV this time around per se, Sandeep. You expect that to get better from where it is right now? Because you're saying that things are not closing. If they start closing, what happens?
Yeah, so look, there are 2 parts to it. One is, the effort required right now to close this is inordinate. And that's where if you look at many of our peers who have come out in the industry, their revenue growths are tepid, their bookings are, some are doing well, some are not necessarily. And I would tend to believe that for the like-to-like effort, the results are not necessarily at the same level. It takes a lot more effort in this economy to deliver the 3.3% constant currency, the 3.8% otherwise. And all I'm saying is for the same thing, the effort required may come down. And yeah, if we can close more, absolutely will. In the past, we have had many years where, we have had even 35% growth year on year. So I'm not giving any forward-looking guidance. All I'm trying to say is market is tough, effort is more. Market becomes lesser tough, things should be even better.
Okay. So, okay, fine. The other question is vertical-wise, right? So, I mean, BFSI, very strong number. I mean, I'm guessing the percentage growth can't keep on being at this pace. But from an absolute number perspective, do you think strong BFSI growth continues, part one? And two, on healthcare. I mean, what is this? US funding cut led pressure? And I read in one of the reports that it might resume from quarter two. I presume that would have been written after the con call. So does it resume from quarter two, or is it still skittish?
Yeah. So two parts to that question. One, the Doge part of it. The Doge part of it, when we look at what happened in the Doge part, there was significant amount of funding cuts done for research activities in universities, foreign aid grants, etc. were significantly cut, and a number of things related to Medicare, Medicaid are also under pressure in terms of reimbursements. So if you put all of this together, it's the same ecosystem. If the university's funding is cut for research, they're buying equipment, software, services, and so on from the entire value chain of healthcare. That comes to a grind, although it may not be that huge, but it does come to a grind. The federal spending in terms of departments related to health services in the US, that slows down or that gets cut. That also has an impact on the entire value chain. So a lot of that is baked in. Now, I don't want to, take a paint brush and paint it for the entire industry, but those are the headwinds for the industry. Within that, we have done very well in healthcare. If you look at our healthcare segment for the last 6 quarters, it was growing at, absolutely brilliant pace. And so it has to also consolidate as a part of our larger deals with some of the largest customers we have. There's a certain amount of offshoring that has to be built in, which is what is panning out, and it's not that big a decline. 2% decline on a quarterly basis, where we are saying it will come back again to growth, because even our healthcare segment is a sum of parts of many customers. So overall, confident BFSI will grow. It may not necessarily be at 50-60% year on year, but it is growing at a very healthy clip for us. It will continue to grow. High tech has started growing very well. It will continue to grow. Healthcare took a dip for a quarter. It will come back to growth, and it will consolidate the growth. So overall, each of these verticals, by the time we finish the year, should be healthy growth, and some of parts should be pretty healthy.
All right, that was the management of Persistent Systems. The stock under pressure today posts its Q1 results, is what we are seeing.